Traders, welcome back to the channel. We're going to be going over the SP 500, the yield inversion that's currently happening. And as you look at this, it is clear as day that you are going into a recession and bad things are coming. However, before we get into that content, I ask you consider liking and subscribing if this channel helps you in any way possible. If you do not know, we are posting videos every single day between 5 and 7 p.m. Central. But let's not waste any more time. Let's get to the content. Now, before we get specifically into the S&P, I want to go over the yield inversion, and this is the ultimate indicator to seeing when a recession is coming and starting to take place. If you want to follow along, this is on TradingView. It's US10Y / US30Y, and that's going to be able to compare the two. You just enter, plug that in, and now it's going to compare. Now, basically, if you haven't seen this before here on the channel, what this shows is basically a yield inversion, and what it's going to show you is as you get closer to 1%, as a whole, that's going to mean it is a complete yield inversion. Going back to 2008, when you had that major drop, you did have very close to that yield inversion. You got right there, and then boom, you dropped. Going back to 07, 08, that's when you saw the major inversion, and then boom. And going back to 2000, obviously, that dot-com bubble, and then boom. So looking at what's happening, going on right now, how are you moving? Now, we've also covered a few major things as well, and I want to highlight this just for the time being. I was covering this with Discord and everyone there. So when you had that scaling from the lows on yields and coming to the inversion point, there was very similar things happening right here. Very similar things were happening here and happening here. And the thing that was happening was really simple. You were getting rates being increased, rates being hiked, interest was going up. That was very big, right? That is something that typically when happens, you set up to get those yields inverting, and then eventually they cut them off and just start stagnating, slowing them down. It's just a trend in the market. You see it happening. However, something happened very differently here, right? So we didn't have a natural movement of the market on this. This was very different all in itself. So of course, right here, you have your COVID drop. And when that happens, what we start to do is just hold off on yields in general. But the market knew we were going to a stage of inflation and yields started to rise back up. But the difference between this run and this run right here is no hikes were happening on interest rates. In fact, the first hike that we had was right here. So when we zoom in a little bit more, coming was right roughly here. This is our first hike that we had, and you went absolutely parabolic to the upside. So you actually went from a 0.8% all the way to 0.97, almost a total yield inversion. Going back to 16, you were seeing over 2 years of just steadily increasing those rates to the upside. But you wouldn't have this at every single Fed meeting. That's worth mentioning. Sometimes they would slow down. Going back to 03 all the way into 07. Obviously, they weren't raising rates every single session. It would happen, you'd come back down, happen, come back down. It was just steady. That's how the market typically works. Now, going into this right now, we know things are very different going into this scale of what we're happening. Why? Because over the past 2 years, this is the first time we have actually raised rates. That's the one thing you need to know coming and jumping out of the gate now. This is your first time you are really getting that movement. What does that mean? We know going into the next Fed meetings, they're expecting around 6 to 7 hikes this year alone. And we are currently in April. We have 8 months left, roughly 7.5 months, and they expect 6 more hikes. This could get terrible. This could get horrendous. This could get very bad over the next year or so. So you need to be looking out for this. What happens when we have a 0.5, a 0.75 hike? Where do you go? The last time you went above complete inversion and the 10-year just started to dominate was way back here in 06. That's when you got above it, roughly almost a 0.0%, but you still got above it. Back in the dot-com bubble, that was brutal. That's when you got further above it. So how high will you really start to go on this 10-year yield, and how much more damage is going to be done before the market starts to let up? So what we're going to do is take a look at the S&P specifically for today. All right, so looking at the SPY, this is what I'm going to cover just right now if you're interested in trading stocks and day trading, things like that. Now looking at SPY, how did we move? Coming into the day, it was a very interesting day nonetheless. You had a nice little bounce going into the day to that 439.50 range, and this is going to be a very key level. This is our new big block and big range we need to be highlighting and spotlighting. This is huge. 439.5 got tested once, twice today. Going into Friday, this was the key level you could not get below. You can see right there, you had that nice bounce on Friday, and you started pushing back up, and then a little bit of a dip ending the day roughly. So that was your key range for support. And then as you can see right now, it has flipped into a resistance and a mighty strong resistance pushing down. After hours, yes, you're pushing up, but you don't know the level where you're going to move, not during the trading hours. We're going to go into the futures here in a second, but roughly right now, you're trading in this range between 439.5 and then 435.5. Now, in my opinion, you did test that key support we mentioned in the previous video. You got that touch you wanted down there. So looking here, I would not be surprised if you start to get back above 439.5, pushing back to 441, 442 roughly, and then maybe even 445. I could definitely see the upside test there. Going over to the Nasdaq, this is where things become a lot more clear. As we look at the Nasdaq, you were testing this downtrend multiple times today, and you broke below it. You could see the retest, and you started to hold it. Now, this is the big question right now. Can the Nasdaq get back above 14 flat? If it can get back above 14 flat, there is clear room to start running once again back to those previous highs of around 14.2. 14.3 up here. And I would assume that that happens in a hurry. So going into tomorrow, if you get back above this range, I suspect a full bull type territory pushing back up to that range. That's specifically what I see, and that's how I see you moving if you get back above the 14 range. However, if we come out in pre-market and we look terrible, if you start breaking back down, if you hold below this level right here tomorrow. So if we come out tomorrow and we are below this trend, in my opinion, you are going to be bearish and you are going to be testing those previous lows. So I'm watching these two key areas. You also tested the 13.75 region we mentioned as well. So as long as you hold above this trend, I'm bullish up into the 14.3 range. However, in the market in general, I am bearish. We've looked at all the signs. The indicators are there. The tone is set. However, you need to know it is earnings season and you're having big earnings coming up. Specifically looking at this week, you can see some of the bigger earnings that we have today. Not that big. Going into tomorrow, yeah, we have Bank of America this morning, but you have Netflix tomorrow. That's going to be a big one. Procter & Gamble, another decently sized one. Airlines coming in as well. But then you have the bigger ones at the end of the week. Tesla, Snap, AT&T, getting some of those tech plays as well. Now, this is going to continue to kind of play out as well because I wasn't really monitoring this specifically, but the earnings season happening right now, this is going to be a big toll and big sector push right now because in my opinion, if you come out and you are bad at all on these earnings, I think the market is set to absolutely dump. These are typically some of your best earnings that you have throughout the year. Just to let you know, these are the best earnings typically going into April. And this is also typically the most bullish month of the year for the indexes. So looking right now, you need to have great earnings. However, if you don't, like I said, I think things are keying up for a massive dump. But to reestablish, I'm looking for a push above the 14 flat area for a bullish day tomorrow. If we stay below this and get below this trend, I'm looking for a bearish day below 13.75, at least a retest, maybe even more. The S&P, you're looking to get back above this 439.5. If you don't, you're going to retest this range at 435.5. And if you break this, I think there's very little support all the way down to 424. And that could be very, very bad. Again, market as a whole looks terrible, but I do believe there is potential upside based on earnings happening. As we look at what hedge funds specifically are doing on the market as of today, you had a lot of selling when you look at the cumulative volume delta. So that basically represents sellers versus buyers, and you were sitting in the negative all day. So that means sellers had total control. But if you look at big money and what they were doing based on this indicator, we can see there is plenty of iceberg orders being filled. This blue range right here. Massive orders being filled all on this dip going to end of the day, which indicated a massive spike at the end of the trading day. So that's not surprising that you started pushing up. So this is something to look at. And this is telling me again, going into tomorrow, I do suspect buying pressure to be there, specifically with how we traded right now. But again, you got to follow those key ranges because that's going to tell you exactly how we're moving and tell you the trend to be trading. But as of right now, I'm sitting more on the fence of being bullish than I am bearish based on the end of day buying from big money. That is going to wrap the video up. If you got anything out of this, please consider liking and subscribing. More content is coming specifically about the indexes, the crash to come, and all the important factors to know as we are moving every single day and the indicators you may be missing. As usual, have a good one.